again, big push off of the previous high. In fact, we can tighten this up on the hourly. So we tagged the top of this range, sold off, sellers took control again. But now we're kind of at a test point, right? We want to see this thing break on the hourly, pullbacks, keep going. That's how I'm watching gold here this morning. Go back to the gold scanner. Again, guys, we built this. If you were just tuning into the stream, we just finished the gold scanner. If you guys already have access to the software, pull it up because you get the gold scanner in here and it is really, really cool. So we now have a nice clean interface to see the current projections for gold. So I'm pulling up the XAU USD chart on the EDGEFINDER, and this is giving us fundamentals as well as the commitment of traders data. So, here's the one thing that has me being a little bit cautious on gold. You have COT data showing 67.55% long, meaning institutional money is pretty long overall on gold. But watch this, guys. We now have this data on this screen as well. Look at this. COT data change week to week is now in this individual scanning page as well. So we saw a slight increase in longs last week, but get this. Shorts were increased by 26,000 contracts. The shorts really picked up their selling last week. And so when I look at gold, I'm still in the bearish camp, right? Even though COT data is giving us a +1, again, this change in shorts, this big increase in short interest has me pretty bearish.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Before we look at any US dollar pair, it's worth looking at the dollar index. And, we spoke a little bit about this last week. If we pull up the weekly chart, this dollar index is, and sorry guys, I'm losing my voice. I do far too much talking these days.
Oh, good.
But the weekly chart, we are back at these weekly highs here. So, we can expect, maybe a bit of, US dollar weakness from this level. How far it will go, we don't know. But, a weekly level, we can expect some selling pressure here. And if we look at the day chart as well, before today's candle, which hasn't finished forming yet, but you can see these candles turning from strong buying candles to bearish doji, bearish doji. So it looked like sellers were coming into this market, but this daily candle is still very bullish, but it hasn't finished yet. So will it come back down to these last highs here? Will it potentially come back down to there or further, or will it break this level? But for me, we can expect a bit of a sell-off here. So bearing that in mind, if we look at the Aussie dollar US dollar, just looking at the day chart, it's just a little bit oversold for me. I talk a great deal about getting value in the markets, and if we follow this downtrend, if we start selling in here, it may carry on for the next 3 weeks down, but there's not enough value here for me. I want to be bearish Aussie dollar US dollar. I am bearish, but I need to see at least more of a push up into this grey zone, or even towards the moving average 20. I need to see a bit more value before I start selling this pair.
Sure.
But you know, as it looks now, we're getting a lot of selling pressure already, you know, what with gold, Aussie dollar, US dollar. So it'll be interesting to see how this daily candle finishes, if it still finishes quite bearish. But yeah, not enough value for me there.
Okay, fair enough. And what else? So you mentioned the dollar. Any other major currency pairs or minor currency pairs that you're watching here today? Do you have any trades open?
Yeah, no trades open today. I've been looking for euro yen buy basically. So we were buying this from Monday. Okay, but you know, you can see this level here was a nice level of once resistance, and now it becomes support. And we're clearly in an uptrend, and you know, this was a really nice buy in here. Okay, and for me, it's still a nice buy because of this bullish candle. Okay, it didn't actually break these highs, and these are things I look for. It didn't quite break these highs, but that is still a super bullish candle. And then all I'm looking for, guys, on the lower time frames is I plot my gray zones, you know, and these are areas where we could potentially look for buys. And it's just, we just haven't had a setup because we haven't seen any buyers. I mean, look at these H4 candles. This yen is just storming down. Okay, so we haven't had any setup on the H4. And these would be my levels here or here. And even on the H1, guys, we still haven't had, you know, if I'm going to buy a pair, I need to see buyers. I know it may seem obvious, but, you know, there's not a buyer in sight today. Yep. So we'll see what happens down here.
It's had a hard time finding anything in there. You can see just by the candles, the nature of them, right? When you get those big red bodies and they're closing towards the lows, it's usually a sign that just sellers are just in control of that market. Even the candle that you're, you know, the latest candle here now breaking through those lows here intraday does look like it wants to make a little bit more of a push to the downside. So very tough to be buying something that is kind of falling apart like that. Frank, what about you? You got any, I know you were trading the S&P. Are you still looking at the S&P at all?
Yes, I'm still in the S&P. I have it trailed, but I wanted to start off by pointing out the yield, the 2-year yield, because this applies the dollar and AU, as Tom was talking about, and the S&P. So today was another break to the highs. It hasn't, I guess, broken this level of resistance, but the past 2 candles have looked pretty bullish. We're now at 5% on the 2-year yield, which is another concerning factor. And it looks like price wants to push higher, so we have to watch for that. And if that happens, then it's going to put pressure on stocks. So it's my trade right now is I have it trailed in profit, but you know, I hope that maybe we can find some support before then, and I can keep riding it up to the I forget what level I had it pointed at, but I'm just watching the 2-year yield right now and the dollar. And S&P, on the other hand, is still looking, you know, it looks a little bearish today because of, we point out this 4-hour candle just sharply rejected this level, but it hasn't come up to test this sort of, I guess, longer term trend line, which I was hoping to see. So I might get trailed out, but we'll see. And gold as well. Let's take a look at that really quick. So it broke out of this long-term falling trend line, but doesn't look bullish to me. If I even pull up the daily chart, you can see today's candle is just sharp resistance on the 1 day, and I had this drawn yesterday, so it didn't quite break under the lows, but it came up and then rejected again. So it looks like gold does not want to move higher. And I mean, it makes sense if the yield is rising, stay away from gold buying and probably index buying as well. So just looking out for now. Maybe look at another short setup on gold. I know you took quite a few last week, which all worked out really well. So I'm thinking the trend's probably going to continue to the downside.
Frank, that point that you just made about the 2-year, and I'll show my screen if you don't mind for a second, Chandler. Big thing on gold, it continues to push lower, but the point that you just made, Frank, was really, really important, and I want to make sure everybody in the audience just caught that. If you don't know what the 2-year yield is, that's the yield being offered, by the Treasury in terms of buying bonds. Now, here's the thing: why does that matter, and why should you care if you're a currency trader, if you trade gold, or you trade? Well, it actually means everything, because especially if you trade indices. Quick example, or why that matters. If yields are going higher, what that says to people is they say, why would I buy the stock market, which is inherently very risky, when I could just get those bonds, which are offering now much higher yields? I could just buy bonds and get paid a nice little fixed income. Why the heck do I need to take all this risk to buy stocks? So we're seeing stocks sell off a little bit off of what Frank pointed out there. It's one of those things. It's competition between buying equities, which are risky, and also, by the way, that extends to gold. If you trade gold here today, the yields rising is a huge competitor, because people are thinking, okay, I want to put my money in something safe. Do I want to buy gold, which doesn't yield me anything, or should I buy bonds, which are currently offering 5%, right? That's risk-free 5%. The closest thing you're going to get to risk-free in the markets is buying Treasury bonds, right? That's the closest thing. There's no risk-free things. But that puts a huge pressure on gold. So between that and China, I'm probably the most bearish I've been on gold in a while. And that's the thing. So the other side to that I want to make sure everyone understands, if you're trading indices, especially higher yields, that makes it more costly to borrow, right? So companies who are borrowing money from the government or from banks or from wherever, if they have higher costing borrowing costs, right? If that's going to affect their balance sheet, that's going to hurt their profits. Companies are going to get hurt. That's why we're seeing stocks sell off here today, especially companies that are sensitive to higher rates. So some things to think about, right? Again, Frank and I pull up the 2-year pretty often. If you're a fundamental trader, you need to keep an eye on the 2-year. It's a very, very important thing. And just a little bit of foreshadowing for the EDGEFINDER, the 2-year is making its way into our scoring algorithm, and Frank and I are really excited about that. So stick around for that. Tom, I want to come back to you. You mentioned, the Australian dollar not being quite at it just yet. I like that euro yen. Ivan actually came on the show yesterday. He was talking all about the euro yen as well. He was also looking for long. So it's kind of nice to see some confirmation between you two there. Any other yen crosses that you're looking at? Are you looking at dollar yen or the Australian dollar yen? Do you have any other yens to pull up?
US dollar yen I was looking at, because all of these yen pairs have a pretty similar setup. We're getting on the day chart, we're getting very bullish. Yesterday was a very bullish daily candle. But again, the thing that keeps putting me off US dollar pairs is that dollar index. That's really preventing me from entering this trade in particular. Yeah. I did like Canadian dollar, Japanese yen. So that was potentially a setup as well. And this has a little bit more room to move into. So there's nice value here. If we look at the uptrend that we're in, it's just bounced off the moving average 20, and we've got this nice bullish candle. But I actually preferred euro yen, but this is potentially a nice area for buys, back up to these highs over here. So CAD yen, any of the yen pairs, well, not any of them, but pound yen as well, for example, is a similar scenario. We've got that bullish daily candle. This one I like less because it's a little bit too far removed from the moving average 20. I really want to see this pair come down to here, before we start buying, which may not happen. I might miss the trade, but that's what I'm looking for, because this represents value in here.
Yep.
We're keeping an eye on all of these yen pairs, and just in terms of Frank's ideas, I really like the Nasdaq short. Because the Nasdaq's come up to a really nice level now as well. So we can clearly see we're in a downtrend. And we're basically testing these last lows in here. and we're getting quite a bearish reaction as we speak. So I quite like NASDAQ for a short, and my target will be this 14500 psychological level.
Yeah.
So yeah, these are the things I've been looking at.
It's interesting, Tom and Frank, just the theme of the day seems a bit risk off, right? We're talking about yen strength coming in, pushing some of the yen crosses down. We see the 2-year, Frank pointed out, probably the most, like I said, most probably fundamentally important thing to talk about today is that 2-year punching up against the highs. Gold traders who are, they just don't understand what's going on, why price is moving the way it's the 2-year, right? It's the yields, it's the dollar strength, and all of that is putting pressure on gold. In my opinion, bounces on gold at this time are limited. So, when you have that 2-year pressing up against the highs and threatening to break out, markets are fearful about, how much further, interest rates are going to go. That is all the sort of recipes to keep gold suppressed and keep it pushing lower.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.